In the intricate world of finance, where fortunes are made and lost, there exists a veil of secrecy surrounding the inner workings of banks. While financial institutions play a pivotal role in our lives, managing our money and facilitating transactions, there are certain truths they prefer to keep hidden. This video aims to unravel the mysteries shrouding the banking sector and reveal the secrets that, if leveraged wisely, can potentially quadruple your wealth. Picture this scenario. You walk into a bank, the polished floors reflecting the aura of financial stability. Behind the counters, suited professionals exude an air of confidence as they handle your transactions. Little do you know, within these seemingly impenetrable walls, there are secrets that could transform your financial landscape. One of the most well-kept secrets within the banking industry is the manipulation of interest rates. While the average depositor may be aware of interest on savings accounts and loans, few understand the intricate dance between central banks and commercial banks. Commercial banks borrow money from central banks at a certain interest rate, often referred to as the base rate. What they don't want you to know is that the interest rates they offer on loans and credit cards are significantly higher than the rates at which they borrow. This interest rate differential is a hidden source of profit for banks. To exploit this secret to your advantage, consider negotiating interest rates on loans and credit cards. A well-informed borrower can leverage this knowledge to secure better terms, ultimately saving a substantial amount of money. Additionally, exploring alternative lending options, such as peer-to-peer lending platforms, may offer more favorable interest rates compared to traditional banks. Your credit score is a numerical representation of your creditworthiness, and it plays a pivotal role in the interest rates you're offered. Banks are well aware of this, and they often use credit scores as a tool to maximize their profits. What they don't want you to know is that you have the power to improve your credit score. Timely payments, responsible use of credit, and monitoring your credit report for inaccuracies are key strategies to boost your score. A higher credit score not only opens doors to better loan terms, but also empowers you to negotiate more favorable interest rates with your bank. Furthermore, diversifying your credit can positively impact your score. Instead of relying solely on credit cards, consider installment loans or lines of credit to showcase a well-rounded credit history. By actively managing your credit, you can break free from the invisible chains that banks use to keep borrowers in higher interest brackets. Banks thrive on managing your money, but what they won't readily admit is that there are alternative investment opportunities that can outperform traditional savings accounts. One such avenue is the stock market. While the stock market is often perceived as a volatile and risky venture, informed investors can capitalize on its potential for significant returns. Investing in a diverse portfolio of stocks, bonds, and other securities has the potential to outpace the interest earned on savings accounts. Moreover, banks often push their own financial products, such as mutual funds and certificates of deposit, CDs, which may not always offer the best returns. Savvy investors should explore other investment options, such as index funds or exchange-traded funds, ETFs, which often have lower fees and can provide exposure to a broad range of assets. Banks are notorious for their labyrinthine fee structures, and what they don't want you to know is that these fees can quietly erode your wealth over time. From account maintenance fees to overdraft charges, every transaction can come with a hidden cost. To protect your wealth from being nibbled away by these fees, it's crucial to scrutinize your account statements regularly. Negotiate with your bank to waive certain fees or explore financial institutions that offer fee-free banking services. Online banks and credit unions, for example, often have lower fees compared to traditional brick-and-mortar banks. Additionally, maintaining a minimum balance or signing up for direct deposit may qualify you for fee waivers. Being proactive in managing your accounts can prevent the slow but steady drain of your hard-earned money. Negotiation is an art, and when it comes to dealing with banks, it's a skill that can unlock doors to better financial outcomes. Banks don't necessarily want you to know, that many of their terms and conditions are negotiable. Whether you're negotiating interest rates on loans, requesting fee waivers, or seeking better terms on credit cards, the power to negotiate lies in your hands. Armed with knowledge about the banking industry's secrets, you can confidently approach your financial institution to discuss more favorable arrangements. Furthermore, negotiation extends beyond interest rates and fees. Many people are unaware that they can negotiate better terms for their savings accounts, including higher interest rates. Banks are often willing to offer more competitive rates to retain customers, especially those with significant deposits. Mortgage rates are another area where negotiation can yield substantial savings. Many homebuyers accept the first rate offered by their bank, not realizing that there is often room for negotiation. By researching current market rates and leveraging this information, you can secure a mortgage with more favorable terms. While banks provide a range of financial products, relying solely on them for all your financial needs might not be the best strategy. Diversification is a fundamental principle of wealth management, and it involves spreading your investments across different asset classes to reduce risk. Banks may encourage you to invest in their proprietary products, such as mutual funds or retirement accounts, but this can limit your exposure to other potentially more lucrative opportunities. By diversifying your investments, you can better weather market fluctuations and position yourself for long-term growth. Consider exploring investments beyond the traditional offerings of your bank. Real estate, for example, can be a valuable addition to your investment portfolio. Whether it's rental properties or real estate investment trusts, REITs, real estate can provide both income and potential appreciation. Cryptocurrency is another area that has gained traction in recent years. While it comes with its own set of risks, including volatility, some investors have seen substantial returns. Understanding the risks and rewards and incorporating cryptocurrencies into your investment strategy cautiously can add a layer of diversification. Banks thrive on the financial ignorance of their customers. The less you know, the more they can take advantage of you. Therefore, investing in financial education is one of the most powerful steps you can take towards quadrupling your wealth. Educate yourself on basic financial principles, investment strategies, and market trends. Numerous resources, both online and offline, can provide valuable insights into building and managing wealth. Understanding the language of finance and staying informed about economic developments will empower you to make informed decisions that align with your financial goals. Moreover, consider seeking advice from independent financial advisors. While banks offer financial advisory services, their advisors may be biased towards promoting the bank's products. Independent advisors, on the other hand, can provide a more objective perspective tailored to your unique financial situation. In the digital age, technology has disrupted traditional banking models, offering individuals unprecedented access to financial tools and information. Online banking, budgeting apps, and investment platforms are just a few examples of how technology can be harnessed to enhance your financial well-being. Take advantage of online banking services that offer higher interest rates and lower fees compared to traditional banks. These digital banks often have lower operating costs, allowing them to pass on the savings to their customers. Budgeting apps can be instrumental in tracking your spending habits and identifying areas where you can save money. By gaining a clear understanding of your financial inflows and outflows, you can make informed decisions about your spending and saving habits. Investment platforms, such as robo-advisors, provide automated, low-cost investment solutions based on your financial goals and risk tolerance. These platforms leverage algorithms to create and manage a diversified portfolio, making investing more accessible to a broader audience. While banks can be instrumental in wealth management, it's crucial to be aware of legal protections and limitations. The funds you deposit in a bank are typically insured up to a certain limit by government-backed deposit insurance programs. Understanding the limits of deposit insurance is essential, especially if you have substantial savings. If you exceed the insured limit, consider diversifying your accounts across different banks to ensure full coverage. Furthermore, estate planning is a critical aspect of protecting your wealth for future generations. Consult with legal professionals to create a comprehensive estate plan that includes wills, trusts, and other legal instruments. This ensures that your assets are distributed according to your wishes, minimizing the impact of estate taxes and legal complications. As technology continues to evolve, the landscape of banking is undergoing a transformation. Fintech, or financial technology, is reshaping the way we manage and invest our money. Understanding and embracing these innovations can position you at the forefront of financial growth. Blockchain technology, the backbone of cryptocurrencies, has the potential to revolutionize not only the way we transact, but also the entire financial system. Decentralized finance, DeFi platforms, built on blockchain, offer new opportunities for lending, borrowing, and earning interest outside the traditional banking sector. Cryptocurrencies, despite their volatility, have gained acceptance as legitimate assets. Incorporating digital currencies into your investment strategy, albeit cautiously, can provide exposure to a rapidly evolving financial landscape. In the world of finance, knowledge is power, and understanding the secrets banks don't want you to know can be the key to quadrupling your wealth. From leveraging interest rate differentials to improving your credit score, exploring alternative investments, avoiding hidden fees, mastering the art of negotiation, and embracing technological advancements, you have the tools to take control of your financial destiny. Banks may prefer to keep these secrets veiled, but by educating yourself and actively managing your finances, you can navigate the financial landscape with confidence. As you embark on this journey to quadruple your wealth, remember that the true power lies in your ability to make informed decisions, adapt to evolving financial trends, and uncover the hidden opportunities that traditional banking may not readily reveal. The future of wealth building is dynamic, and by staying informed and proactive, you can position yourself for financial success in the years to come.